Welcome back to another stockdads video, guys. My name is Chris. A lot of people say that 90% of day traders lose money, but is it really that improbable for you to make money trading stocks or options? Now, I always like a good challenge, so I set out to test my luck and my skills with this $1,000 small account options trading challenge. And the results were pretty amazing. I'm gonna go over some successful strategies that I used, some trades that I specifically made, and some lessons that I learned. But before we go any further, I do wanna point out that this is not financial advice and that options are inherently pretty risky. These are just the results that I personally had, and they may not be typical for everyone. If you don't know what you're doing, your $1,000 account will be worth as much as this. And this is fake money. Let me know in the comments though if you do have a small account and what is your goal to grow that account to. Now I'm gonna show you the 3 covenants that I followed when doing this small account challenge that I think anyone with a small account can follow. The first one's gonna be always set your take profit and stop loss levels. So when we say take profit here, that means that you wanna set a defined level that you're ready to take profits on your position. So let's say an option goes from $100, goes up to $200, that's your take profit level. So 1.0 per contract goes to 2.0, right? Very simple. But at the same time, you know, we're not just trying to think about when we're gonna make money, but there are gonna be times where you lose money in your position, and you wanna make sure that the amount you lose is something you're comfortable with and something that is worth taking a risk for. Because let's say you get into a position, right? 2 is your defined take profit level, but maybe your defined stop loss is at 0.5. So essentially you're risking $50 to make $100. That's the potential scenario here, right? That's a 2-for-1 ratio. That's typically what I like to look for when I'm doing my options trades. However you're trading, you want to make sure that at the end of the day, your reward is higher than your risk. Now, why should you do this right away when you get into a position? Very simple. It's easy to get lost when you're doing a trade. Mentally, you want to obviously make money, and sometimes your judgment gets clouded. You see a position start to go down, you're gonna try to hold it. You're gonna try to wait for it to bounce back, but sometimes it doesn't bounce back. You have to be disciplined and make sure that you're following your rules. This is so important to being a consistent, profitable trader. That applies as well to the upside, okay? Sometimes we get greedy. A position might go up, 50% in like an hour after you got into the trade, or maybe even a couple of moments after you got into the trade, right? Are you gonna keep holding it forever? That's probably not a good idea. You want to, once again, be disciplined and figure out a strategy for you that works consistently, where you're consistently taking profits. Number 2 here in a similar vein is going to be keeping your small option sizes. So when you're thinking about what types of options to get into in a small account, you don't want to throw $500 into a single trade, and especially if you're not going to follow this rule, to set your profit levels and your stop loss levels. If you're going blind in and balls deep into a $500 position when your account is only, you know, a $1,000 account, that's already half of your money that you could potentially be losing in a matter of moments. Don't want to do that, right? I would say unless you have, getting into the third point later on, unless you have 10 plus indicators or something that you're extremely confident in this trade, maybe you get into some $500 positions. But otherwise, you know, 99% of the time, you wouldn't want to hold so much money into a single trade, because once that goes wrong, boom, your portfolio is done, right? So I like to keep it, if it's a $1,000 account, you might want to risk about 10% of your portfolio into a trade, or 20% of your portfolio, 30% maybe even, if you're really confident, once again. And throughout this journey, I did take some bigger positions, like $300 positions, but with rule number 1, where even if it's a $300 position, I'm not actually risking $300 for that position. I'm only risking maybe $50, maybe $70 tops, right? In some cases, I only risked like $20 or $30 if I really was just scalping, buying into that position for a few moments and then selling it right away. I'm not trying to start a second small account challenge, 5 minutes after I started the first one, right? It just doesn't make sense, and it's just not sustainable, once again. So small account, small option sizes. That would, once again, be 20% of your portfolio, maybe 10% of your portfolio, depending on how comfortable you are, and again, how tight your stop losses are. And then third one here is going to be always do technical analysis. If you're a day trader, short-term trader, you really need to have some sort of thesis going on as far as why you're buying and selling these stocks, and you think you can profit in the short term. Otherwise, you're just throwing darts at something random. Now, I know it's really tempting, and I've done this before personally, especially when I was first starting out. But whenever you see a lot of people hyping a certain stock, that is not an indicator necessarily, or based on some intuition, based on a gut feeling that you have, I would not do it. So some of the things I would consider as a valid indicator would be RSI, relative strength, of course. You have the moving averages, the MACD indicator, support and resistance levels. You can also do fundamental analysis, think about earnings, sometimes news as well. You have the ticks and the advanced decline. Those are all things that you could potentially use as indicators that are pretty simple to understand. Now let's move on to 3 trades that I made. We're gonna break down exactly what I saw in each of those trades and how I got out profitably. All right, guys, so the first one we're talking about here is CVX call option. So this is a trade that I took about on October 5th. And this was right after the OPEC news came out that the supply was being cut. The oil prices would probably tend to go higher, as well as the corporations, which would make money off of it. And this was actually an alert that I followed from the stockdads Discord, our own private Discord community where we do options and stock alerts, crypto, sports betting, and more. We have live sessions and all of that good stuff. You can just see some of the value that we have right here. You can see that there is a break of the downtrends right there, and that was the entry point for Mr. M, and he has the profit levels as well. In my own case, I'm looking at the chart as well, and I saw this pattern forming right here. So if you look at this, as well as these higher lows, you can see that CVX is trading in a pretty clear pattern. So I took an entry somewhere around 936 here, which the stock had just popped very significantly here. You see a big engulfing green candle right there. Got in about here and I just held that position. And as I stated before, you want to have your take profit and stop loss orders in place. So in my case, I did a limit price of $3 and a stop price of $1.50. So my estimated profit loss risk ratio here is 2-to-1. Here is right after I got into that position. And here's what that looks like with the order confirmation. And I want to point out that this is also a pretty interesting pattern here. If you wanted to trade to the downside, I did not do this, but this is something that I could have done where I see this trend break. That means you could get into put options. And lastly, another reason why I got into this trade is simply because energy stocks have been on fire throughout the year. And these are the only sector that is green really for 2022. On this chart, you continue to see higher lows form. So I thought it was a pretty good chance that with that news especially, the stock would bounce, and it certainly did and has continued to go higher really. If I took a longer dated option, I could have made more money honestly, but then those would be a more expensive option to buy. All right, next up, let's take a look at Celsius. So here is what I have as the resistance roughly, and here's what we have as a line of support that was built. This is definitely one of my riskier trades because I did hold for a couple of days, but I thought that the support was pretty strong. And then we also had the momentum was pretty stable and actually ticking upwards. I noticed that on this daily chart, if you zoom out more, you have a pretty decent cup and handle formation there, and that the RSI also had pulled back to a previous low as well, and it seemed to be holding up. Moreover, on the fundamental side, I know that Celsius consistently beat their earnings and revenue estimates. You could see 0.12 versus 0.08. They did report 130% plus revenue growth. That's pretty insane, especially in these times. And it had that huge run up to about 100, 120, but then, pretty much gave back all of those gains. So I kind of saw the opportunity of a bounce here. All right, and lastly here, guys, we have QQQ call options. I already drawn out the lines here, but basically you can see that the RSI opened up around 80 here at the start of the day, and you can see that the QQQ ETF immediately pulled back, and it started to pull back towards that first support zone, which I like to label as the previous high right here. right? So oftentimes if a stock is pulling back, the previous resistance, we will say, acts as a support. So you can see initially we did have a bounce as I thought. So I did take a call option position here. You probably could have actually just taken put options to start the day since it came out of the gates so hot. But yeah, that's what I did. And you can see that nice hammer candle right there. It did start to bounce up and also went all the way up to 273 here from an entry point about 272. That may not sound like much, but $1 in the ETF in a shorter dated contract is a pretty good, decent sum of money there. To really analyze this even further, you can see that this area also could act as a support level. It did start bouncing a little bit there, but once again, it gave that up. Then you have this even bigger support level. And then this is the last level that I had drawn here if it really got all the way down there, but it never did. And if you think about it, once again, this area could be a great support level here to get in, especially if you see that hammer candle starting to form. And then it moved all the way back up here, testing this resistance once again. And unfortunately, it dipped, it popped its head a bit over it, but then it just went all the way back down towards that support level once again. And this was definitely really volatile session for sure. You could have traded it both ways multiple times. So I usually have the ticks and the advanced decline lined up on the side of my screen. You probably can't see it too well here with this recording, unfortunately, but let me just pull that up real quick. I have the ticks here and I usually have this side by side with my stocks whenever I'm trading. And this may look crazy if you're not familiar with it, but the tick indicator essentially shows you the number of stocks that are going up minus the amount of stocks that are going down. So if it's a positive number, that means pretty much the whole stock market, or at least a huge batch of stocks, are all going up at the same time, which suggests that there is a broad momentum going on in the stock market. And if you're getting into, call options, that could be a good momentum indicator that it's going to continue to go higher. All right, so going back to the cues, in this case, when I did get into my position here, right, we'll say buy, I was looking at the ticks and they did suddenly flip from negative to positive, quite positive. I believe something like plus 500 or plus 800. That was my indication that, hey, maybe I should get into a position here, but I'm still going to keep it tight with the stop loss because you do have to respect the fact that if you look at the RSI and if you look at the way it just opened up that day, it was also like plus 2.5% straight out of the open, plus 3%. Chances are there's going to be a bit of a sell-off and you do have to mind the trend here, which is definitely towards the downside. So really, if I look back on it, a smarter move, it's okay to play these counter trend trades as long as you, again, have multiple reasons why you're doing so. But I feel like it might have been smarter to just go with a put option to begin with. So that's something that I might consider for the future. But either way, it worked out and you could have traded in multiple ways. So after 9 days of trading and 13 trades made, in the end, I turned that $1,000 account to $1,414.49. I have to say, all things considered, especially with the market being so volatile, I'm really pleased with those results, I gotta say. Now, I do want to point out that the process was far from perfect. I actually used a margin account instead of a cash account. So this means that I had limited day trades and there were a lot of times where I had to swing positions overnight, even 2 days. And that does increase the risk here. So going forward, I'm actually gonna do a change where I'm gonna switch my account to a cash account, which means that you do have unlimited day trades, but you have to wait for the funds to settle every time you trade. This actually fits into my strategy perfectly though, because at the end of the day, I do wanna stick to smaller options positions. So I could do a $100 option, a $200 option, sell those, and then I still have day trades because I still have funds in my account that I could use readily. And then once I do those trades, after a couple days, my original funds will come back from the first 1 or 2 trades that I make. And then essentially I just keep having unlimited day trades. This will help avoid overnighting too many positions at one time, because when you do overnight a position, you can't actually use take profits and stop losses. those only apply during market hours. This will definitely be a great change to make, and I will plan to not overnight as many positions and day trade more often. And lastly, I have to be honest and point out that 1 week's worth of time is not enough to determine if you're a consistently profitable trader. So we're gonna bring this challenge back. I'm super pumped for this. I wanna update you guys in a month with another video sharing my progress. I wanna invite you guys to try this out as well. Maybe you guys will do even better than me, but make sure that you follow some of these tips that I have for you here today. Set your stop loss and your take profit levels. You can do that right away as soon as you get into a trade. Number 2, follow small option sizes. This will help you tremendously to not blow up your account so you don't have to start another challenge, and especially if you're not gonna follow the stop loss method. And number 3, always make sure that you have several indicators or reasons why you're getting into a trade. Make sure you're subscribed so you don't miss the next update to this challenge. I'll see you guys in the next video, and good luck trading.